Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these roundtables week after week after week. This is the 515th free public roundtable. We started back in the fall of 2008, and it's been going for all this while. We've almost every year we do at least 45 roundtables with here and there gaps. But last year we did more because we were not traveling, we were not going anywhere, we were hardly taking any breaks. So anyway, this has been going on for a long time. Over 150,000 people have attended. This event is being recorded. Every single recording of our roundtables are available on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1M1M and at Stromana. You can live tweet today with hashtag 1M1M. This is a roundtable, not a broadcast. We want you to participate. I will open up the line for you to dial in if you'd like to later. We do have scheduled programming first. We will start today's session with Mark Achler, Managing Director of Math Venture Partners. Mark has been here before, and I'm really looking forward to catching up with you, Mark.
Yeah, Saramana, thanks so much. It's so nice to see you, and congratulations. 515 interviews. Wow. That's, done so much good work. Thank you.
We do everything virtually, so this is 515 free public roundtables, but we have thousands of other roundtables behind the paywall. All the premium program we do also with roundtables, so we do a lot of roundtables.
I'm sure everybody's grateful for all of the work that you do. Thank you so much.
So, Mark, let's catch up. You were here a while ago. Let us talk about what has happened since. Where are you with your fund? What are you seeing? What are you investing in? What do you want to invest in? Let's catch up.
Sure, yeah. Well, first of all, I always start out with gratitude. It was a very difficult year for everybody, and I'm grateful that our portfolio companies are doing well, and our families are healthy, and I don't take that for granted. So I spent a lot of time talking to CEOs, especially during this last year, about resilience and mental health and persistence and just, how do you get through difficult times? So, yeah. But all in all, things are well. So what would you like to tell? You asked a lot of questions.
Let's talk about what is the fund situation? Which fund are you investing from right now? What is the size of the fund, and what is the fund philosophy currently?
Yeah, so we're on our second fund. This fund is a $46 million fund. We have two types of investments. We'll do we call it a Math 100, where we'll put in $100,000 at a very early stage, just to get to know the company, get to know the founders, help if we can, see product market fit. And then the majority of our capital we deploy in the first real round of institutional funding. So I don't know if we call that a seed or a seed plus or an A. It kind of depends on where you are. But the first real round of institutional funding, where we will write a check of $1 to $2 million in that first round, up to $5 million across the lifetime of an investment.
Okay.
Go ahead. Sorry.
I was going to ask, when you write these $100,000 checks, are they concept financings, or are you looking for something already done? What triggers a $100K check?
Yeah, typically the product is built. It can have very minimal revenue, but what we're really looking for is some kind of demonstration or the beginnings of product market fit. And what we are, our investment thesis, we're software technology. We tend to be B2B SaaS, so we're 90-10. We're 90% of our investments are B2B. We do a little bit of B2C, but our fundamental investment thesis, you may remember, is around sales and customer acquisition. We are looking for companies who not only can build a great product, we think a great product is table stakes, but they know how to sell the product. And so we think the greatest product in the world without customers is a great product, but it's not a business. So what we're looking for is an articulation and some form of leverage in customer acquisition.
Mm-hmm. And you are still investing all over the United States, yeah?
We are. And Canada. We've made 3 investments in Canada. And all of it, we probably call ourselves Midwest-centric. We're based in Chicago, and about a third of our investments are in the Midwest. And then we invest all over the country.
And what has been your experience in COVID? Are you investing in people without actually meeting them in person through Zoom calls?
We are, and it's challenging. It's challenging equally on both sides of the equation. You know what so we've been investing, but I'll tell you what I miss as an investor. I miss going to a company and seeing the culture, seeing the people, seeing how they interact with one another, seeing how the management team interacts with one another. That is hard to do in COVID.
Yeah, of course.
It has stopped us from investing, but I miss that personal touch.
Yeah, well, I think for what we do, it hasn't really changed very much because we do everything virtually anyway, and mostly what we are doing is strategy work, and that hasn't really been a problem. But I think for what you do, which is actually, going deeper and, doing that due diligence and getting to know the people at a much deeper level before you write significant checks, I think it is a little bit tricky. And I would say that the inability to sit across a table and have a meal together or a few meals together is a disadvantage, I would say, on investment.
And by the way, it's bi-directional. So I say to entrepreneurs, you have to, picking who your investors are. And I recognize that for most entrepreneurs, it's hard to raise money. But if you can raise money, they should be as selective on who's going to sit on their board, who their investors are, do they share values, and it's also hard for the entrepreneur to get a sense of the investor equally. Yeah.
Well, I think, you're entering into a multi-year relationship, because you are in the early stages, you're probably entering into a 5, 7, 10-year relationship without ever having a human, interaction in person. That is, I would say that's tricky.
Yeah. Yes. No qualifier necessary. It is hard, and it's hard for both sides. Right.
So let's talk about trends. What are you investing in? If you want to, use some examples, some case studies. What are you seeing? What would you like to see? What trends are you picking up that you would like to invest in more?
So I'm going to go a little bit different. I'm going to answer your question, but in preparation for this, I was thinking about this question, and I'm going in a slightly different area. Mm-hmm. And so here's what I'm interested in. I'm interested in trust. I think we live in a society where trust between companies and their customers, trust between companies and their employees, trust between companies and their partners, I think trust is at a premium. And I think most entrepreneurs don't spend enough time thinking about the importance and value of what does it mean to be trusted. The second area that I'm really interested in is simplicity. One of the things that I think in technology in general is that we tend to overbuild our products with too many features. And part of the challenge that I see all the time, we see between 1,500 and 1,700 companies a year at Math. And so we get a lot of data points. And oftentimes I hear entrepreneurs say, our product does X, our product does Y, our product does Z. And what I often think is they really don't understand their customer deep enough to have the courage to really focus. And so one of the things that I really tend to work on is an investment thesis around simplicity. The next area is empathy. And empathy, so I'll give you an example. I oftentimes ask enterprise salespeople, who's your champion? It's always somebody. And I say, okay, what are their KPIs, their key performance indicators? When they get a bonus at the end of the year, what is that bonus predicated on? What are the financial levers of your customer? And most salespeople don't, and most entrepreneurs really don't know the answer to that. And to me, the best salespeople, the best entrepreneurs really deeply, truly understand their customers, understand the language of their customers. And I have a saying, it's not about you. It's not about you, it's about them. And so one of the things that I probe and I think a lot about is empathy. The next thing I look for is leverage, especially in B2B sales, but also in B2C, which is how can you force somebody to take an action? An example might be compliance, governmental regulation. It could be insurance that says, we won't grant you insurance unless you do X. It could be brand trust arbitrage with, like Salesforce installers, whatever the leverage in the sales model. I'm particularly sensitive to that. And then the last trend, and I know this isn't where you were going, but when you asked the question, I know this is sort of atypical from VC.
No, I love to hear. I love to hear actually analysis like this. So please go ahead. We can continue. Go ahead. Absolutely.
And that's the last thing I look for. So when I ask people who's the champion, especially in B2B sales, and it's very rarely the CFO, the Chief Financial Officer. And so I say, what would it take to get the CFO to be your champion? Not just to approve the budget, not just to approve the expenditure, but to actually be so excited and enthusiastic based on the financial implications of what your product or service has to offer, that they're actually, he or she gets on stands on the table and pounds his or her fist and says, not only am I approving this, here's the budget, go do this, because the financial argument is so compelling. And I'll leave you with this, which is human nature for all of us is we gravitate towards our strengths and we avoid our weaknesses. Yes. Everybody. Yes. I mean, that's human nature.
Right. Yeah.
And most technical people, most entrepreneurs in technology, they either are very technical or they're maybe they're financially oriented, but they're not very good at sales. And they always say, well, like if we build it, they will come. And one of the statistics from the National Venture Capital Association, which I think is really scary, true but scary, is that of all the companies that get venture capital funding, 67% of them return less than 100% of the capital they receive. 67%. So, in my venture capital shop, we see, I'll round it out, 1,500 deals a year. We make about 10 investments. So 1,500 down to 10. And according to the National Venture Capital Association, of those 10, hopefully we're better than average, but of those 10, 7 are going to fail. Right? So it's really tough. Oh, I think I'm losing you.
We are here. You're back. There we go. I think your video kind of reset. Can you hear me?
I can hear you, but I can't see you. Your video is going.
Keep going. Let's keep talking. I think your video seems to be going in and out. So yes, I think you're absolutely correct on all of those fronts. So let me ask you a question based on what you said. You said you do mostly B2B SaaS. Now, how much of that is enterprise? How much of it is small business?
It's a mix. We like enterprise sales, but we also do some small business as well.
Primarily enterprise?
Yeah, our portfolio is pretty eclectic.
And what has changed in all these things that you said just now, all the principles that you said just now apply to, I would say, enterprise sales more even, because people, it goes through more scrutiny in enterprise sales, and the price tags are much higher. Has anything, from your point of view, has anything changed drastically in the sales process of late?
Well, sure. So COVID changes everything, of course, and it's very hard for sales, especially enterprise salespeople, selling a larger ticket item when you're doing it remotely and not face-to-face. And what we saw in, I would say, April and May was a pretty dramatic slowdown in sales. But by the time October, November, December, sales picked right back up. And in almost every one of our enterprise portfolio companies, they're either at or ahead of where they were, depending upon the industry that they serve, of course.
Yeah.
But, everybody has to adjust.
Sorry, come again?
I'm sorry. Yeah, I said everybody has to adjust, and it took some time to adjust.
And if you look at the public market, right, the public tech stocks have done very well, and their earnings have been good. It's not like they're missing a lot of their numbers. Many are actually overshooting their numbers. So it's kind of striking how well people have adjusted to, buying technology without human interaction in person, even large deals, right?
Yeah, it's really interesting how that has happened. One of the things that I'm working on is I'm calling business continuity. So there's a couple concepts here. The first is, can you make the sale? The second is, can you upsell, land and expand? Can you grow within that account? And then the third concept is retention. And one of the things that I'm particularly interested in following over the course of time when an enterprise sale is made remotely is, does it impact retention? And particularly, like year 2, year 3. And one of the things that I'm thinking a lot about is business continuity. And a lot of VCs don't like services or consulting. I actually like it. I like being.
Me too. I like it very much.
I like being closer to the customer. And one of the things I'm working with some of my companies on is this offering this business continuity service that sort of manages uptime, manages utilization, and when they see a drop-off, being able to right there and then immediately in real time figure out why there's a drop-off of utilization. Yeah. And one of the things that I'm finding, especially in enterprise, is that there's a lot of employees who either leave or they get reassigned to another task And if there's some specific knowledge that they have, they've been trained to use the software, and there's not anybody else in the organization that's been trained to use whatever that enterprise software is, what happens is retention starts to suffer.
Yeah.
And so I think we also have to adjust our business models. And I think it can be high margin. I don't think you have to give that away. I think you can charge for it. But I think it's really important to stay close to your customer, especially at all times, but especially during a pandemic.
Well, I think where the bias against services comes from the old-fashioned VC world, where people always wanted more margin, and the services are less margin, less scalable because you need human beings involved and so on. But I think in a world where people are buying stuff from the internet, even if there are salespeople involved on the internet, and if you try to go that model with absolutely no human touch anywhere after the sale, I think actually the chances of things not sticking is very high. So I think having some services involved in to shepherd things through and making the ROI come through and really penetrating the usage of the product into the organization, or adoption of the product in the organization requires some amount of hand-holding and so forth. So I think I resonate with what you're saying completely.
So here's what I tell entrepreneurs. They say VCs might not like service revenue for the reasons you just said, but they really don't like high retention rates. I'm sorry, flip it. when lower retention rates, when the customers start to drop off, because it's really expensive to get a customer.
Yeah.
Right? And right, so it's just common sense.
Yeah. No, absolutely. So let's talk about a couple of portfolio companies. What are investments that you're really excited about? What are they doing, and what are you seeing there?
Thanks. It's there's some really interesting companies in our portfolio. We have over 55 investments. I think some of the big ones that many people will know is Acorns. Acorns is a financial services company helping people save money. They're doing very, very well. It's a unicorn. Built-in is growing leaps and bounds. They have services in many cities around the country that build tech communities and help people find jobs. Eat Street is food delivery. Eat Street is based in Madison, Wisconsin, and they decided that they were going to go after secondary markets. So they didn't want to compete in Chicago and New York against Grubhub or San Francisco. So they went to, smaller, mid-sized college towns, and they're in a pandemic. Their business just took off like crazy. Aprovita in healthcare. So Aprovita is a company that creates a platform that allows entities to exchange data and analytics in a safe and secure way, and specifically in healthcare. So if you think about the cloud, once you put information into the cloud, you can do three things with it. You can retrieve it, you can store it, or you can share it outside of your entity. And what Aprovita does is it allows, in this case, hospitals and payers in healthcare to share data and analytics with other entities in a safe and secure HIPAA way. And they have huge leverage in customer acquisition because they formed a partnership with the Joint Commission that certifies hospitals and makes hospitals eligible for Medicare reimbursement. And the Joint Commission standardized on Aprovita and forced every single hospital in the country to use Aprovita to submit their data to the Joint Commission in order to be certified so they can get Medicare reimbursement. That's a great example of leverage in a sales model. And another one we were really excited about is Retrium. So Retrium is a company that takes all of your training documentation, user manual, company manuals, employee manuals, HR documents, puts it in the cloud, and very easily allows any company, more for smaller companies, less than 500 employees, to share all of their important information with their employees. And that company's doubling year over year. They're doing great. And
is the fund philosophy chasing unicorns? Are all your companies looking to become unicorns?
No, I'm from Chicago. We're from the Midwest. I like to roll up my sleeves and build real companies solving real problems. And, if they turn into a unicorn, that's great. But the odds of that happening are so slim. We're not building our portfolio predicated upon the expectations that every company turns into a unicorn.
I remember you said that last time as well, so I'm just checking if you have evolved from that perspective.
Oh, although I wouldn't mind. I mean, it'd be nice.
Sure.
But
I think if your sole goal is to find companies that have the potential of becoming unicorns, you invest differently. You ignore a lot of things that can be, more modest returns. There's a school of thought that would tell you that, it takes as much effort to crack a large problem as it does to crack a small problem. My response to that is there aren't as many large problems as there are smaller problems. So yes, it takes as much effort to build a company. Any kind of company takes an incredible amount of effort, but, if given my agenda, which is to really democratize entrepreneurship and get people from all corners of the world to be able to do this, you can't have this philosophy that everybody needs to be a very large company.
Yeah, and we have a mission. We really believe in a long time horizon. We're building a firm that we hope will be around for decades, that will endure, and we believe in building relationships and giving back. And so we have a give first mentality. We're always helping and mentoring entrepreneurs and doing whatever we can to build the flywheel, the ecosystem, like you're doing. And, I think having that longer term time horizon also enables us, because we know we're going to be around for the next fund, the fund after that. And, we like to invest in entrepreneurs.
Well, funds of your size, I've talked to many of these because that is kind of really where there's been an explosion of funds, the micro VC category, and we see a lot of people coming from that world. Many of your colleagues or peers in that segment are thinking very innovatively, and they're thinking of in some cases exiting through strategic deals. Their portfolio, but also in some cases I see people doing the very early stage and then exiting into Series C or Series D, and that has become a trend actually.
Yeah, so far we really like what we're doing, and we've decided in Fund 2, we had the first fund, we kept the exact same investment thesis and philosophy. We had a little bit more money in our second fund, and we're investing more, but it's the exact same investment thesis. And we're about a year from now, at some point in time, we'll start the process for the next fund, and we like our spot. We think we're really good at it in the early stage, and the way we think about it is value add. I've been a CEO 4 times. I've built and grown several companies, including a multi-billion-dollar company. And we think that that money's just money, And our value add is not our money. Our value add is all of our operating skills and experience and the ability to help our portfolio companies grow and scale. And we're particularly good at the early stages. And so that's what we're going to stick at.
Great. Well, wonderful catching up. Well, maybe after COVID, if you're out here, we should plan on getting together in person. The vaccine is in sight, but this morning actually I read that California has just authorized a much broader distribution of vaccines, but nobody knows how to get it. The bureaucracy and the incompetence of the bureaucracy is really mind-boggling. What's going on is just mind-boggling. Yeah, anyway, delighted to see you, and we'll catch up soon again. Bye.
Okay, thanks. Bye-bye.
Take care. Folks, we're going to switch to the entrepreneur pitch section. Just quick expectation setting. We are on your side. This is a safe working session. So all we're going to do is brainstorm about your strategy. You don't need to be nervous, defensive, nothing. We are, we're friendly, and we are really completely on your side. If you disagree with any feedback that you get today, that's okay. It's your venture. You will do what you want. I will give you, unadulterated or sugar-coated feedback. I'm not going to try to not tell you what I see. So be aware of that. Let's get started. Pavan Gourisetty from Campbell, California. Please, Pavan, unmute your line.
Yes. Hi. Hi, Shramana. So this is Pavan here, based out of Campbell, right here in the Bay.
Yeah.
Hey, thanks for giving us this opportunity. We entrepreneurs are working in the vacuum all the time, right? So we needed to hear some hard fact truths. So I've known about you, I've heard about you, and I follow you. So really looking forward to this opportunity. And yes, I would expect nothing less. Direct feedback on my face would be great. That session that we just had with Mark, it hits quite a few points. The first and the foremost thing is obviously the humility aspect of it, and I guess we all need it. So jumping into, I'm just going to take a 1-minute summary of who am I, right? So I've been in the Bay little over 21 years, spent all my time in the technology industry, predominantly in product management, enterprise product management, right? Working for, OpenText, EMC, Park, Palo Alto Research Corporation, and most recently, this company, Makerspad. So what we are trying to do here is actually a cumulative of everything that I have seen in the enterprise product management industry, right? B2B. So how certain products are built, and why are we doing certain things in terms of release planning, or what is our investment strategy going to look like when it comes to, releases, planning out future, roadmaps and whatnot. So this has always been a very gray area depending on who you talk. They have very different views in terms of how one should build a future. And this has bothered me for quite some time. I mean, whenever my manager would come to me and he would say, okay, Pavan, you're asking me for $500,000. Give me a revenue in terms of how we are going to see this payback happens, right? It's always a guessing game. I mean, you can do all sorts of mathematical analysis, but the reality is very different. So we started off from there at the beginning of last year, me and along with my co-founder. We started off ideating there. We did quite a few pitching sessions, and we pivoted 3 times. What you're looking at right now is after our 3rd pivot. Okay. The concept here is, look, it's great. Shramana, if you can go into the next slide. We can skip this one too. Perfect. Right. So one of the investor actually said, Pavan, it's great that you're collecting all this data about how a certain product is performing, but what your venture is missing is what are you going to do with the data? You're collecting this data, but then you're leaving it for the customer to figure it out, what to do with it. Second thing is, where are you going to focus your analysis? right? So we said, okay, you know what, these are very tangible feedbacks. So there's no point in collecting the data if you don't tell the customer what to do with it. And who is that customer? So we kind of honed in on it and we said, okay, we are going to be that performance analytics company, which is going to help our e-commerce customers gather relevant information about their customers today and come up with intuitive ways to engage with the customer where the bottom line is improved product sales, customer retention, cutting down your acquisition cost for a particular customer, right? So that's the premise of what we are going to talk about today, right?
Pavan, your target audience, these top 2,000 e-commerce firms?
Yes, that is correct.
Okay, great.
That's exactly right. So now there are two stages to what we are trying to do here, Snowna. So the first one is, what data are we trying to collect, right? If you look at in the traditional product management industry, we use product advisory boards, we talk to customers, we bring them on board, we run surveys and whatnot. But the problem with that method is you never really get the true emotion of a customer when he's engaging with your particular product. Right? It's always that, okay, I think you can do this, or if you solve this problem, we might be able to use it. But when they actually start interacting with the system, that's where you're going to feel like, okay, what they said is very different from what they are trying to do. So I'm using this concept of behavior analytics, right? Let the customer come into your particular application. Let's now start tracking what are they doing on their application, how are they navigating it and whatnot, right? So we started off with this premise and very quickly we identified that there are many companies who are actually doing this today. You take a look at Amplitude Analytics. You can look at Google Web Analytics. You can look at Open Web Analytics. Everyone is trying to introduce a certain flavor of it. So what we understood was, look, we don't need to reinvent the wheel. Let's figure out what are they trying to collect the information and how are they collecting, and let's start focusing on delivering that meaningful insight. So the first and the foremost thing with our product is creating a centralized data platform. So what that means is that if I am a e-commerce marketer or someone who is working in the sales department, engaging with the customer, I would want to know everything about my customer, irrespective of the source, right? I mean, we might be collecting information using Google Web Analytics. We might be collecting information or tracking them through Salesforce and whatnot. So the first and the foremost value proposition we are bringing to the table is, hey, let's get all that data, normalize this, and give it a unified view about one customer. If someone wants to know about me, this particular centralized view should tell everything about my purchase habits, my purchase intent, my life story. That way, if a marketer wants to sell me the product, they should have pretty good understanding in terms of, is this guy going to buy it or not? Right? So that's our first value proposition. And I will walk about how it is done today in the market, right? Then the second one is obviously deriving themes from it. How are you going to look at cohorting the analysis, right? I mean, you have cohorts, then you do customer segmentations, or you try to identify themes comparing me to many other people in the cohorts. So that's where our second value proposition comes in. Now, once we have this data, the third aspect of it is, what do we do with this data? What kind of tools do I offer my marketers and sales teams so that they can engage with the direct customer, and when they target a campaign, the campaign has a higher success rate when it comes to generating the revenue. May that be, sales campaign for a particular class of a product, or a campaign that generates a lot more margins. Let's say Walmart is running a campaign for bunk beds, right? And they wanted to know who are all the customers who have a potential of buying this product, so they can run a very targeted campaign and have a higher chances of success. Today, if you look at the campaigns, they're very, very vague. I mean, they're not personalized. They just send you a big booklet in the hope that something is going to catch your attention. And if you come back to the store to buy it, great. If not, that money is gone, right? And then the last one is the whole conversion rate optimization. Now, this is a pretty loaded chart, what you're looking at. This will,
I have lots of questions here, Pavan. Maybe you should go through your presentation, then we can come back here if necessary.
Absolutely. So if we go on to the next slide, so this is what is done today, right? I mean, pretty siloed approach. If I am a marketer or a salesperson, I want to run a campaign, I would go into my CRM tool, I would go into my web analytics tool, I might probably gather the data from the mobile, or maybe even do something offline. Now, I will have to take this effort of taking all this data, putting them, maybe dumping into Tableau or Excel spreadsheet, and try to run pivots and figure out what the themes are, most common points. This is the very traditional way of doing things, right? And once you get to a point where you can say, okay, now I have a full idea of who my customer is, and I'm able to consolidate them into the right sections and whatnot. Now I'm going to start thinking about campaigns. So now if I wanted to do some campaigns, then I'll take this data, dump it into some marketing automation tools. I forgot the name of the company that Adobe purchased. Marketo. Marketo is so it's a marketing automation tool. You take all this data, you dump it into Marketo, and Marketo will say, okay, so now let's create some workflows to engage with your customers. So this is a pretty convoluted process, quite laborious. The customer is not engaged along the way. So if we go to the next slide, so what we are doing here is the most important highlight is convenience, right? So what I am doing is on behalf of my customer, I am building connectors into these systems. I'm not trying to compete with them. I'm getting their data and I am putting it into my centralized data platform, and I am crunching the numbers on their behalf. That way, when they type in my name, it should show up everything about me, my previous purchase history, my habits, how am I engaging online, which particular products am I willing to give review on. So they're kind of building my customer data profile. Okay? Once I have that information, now I'm opening them up with a world of opportunities where they can run targeted campaigns, create custom workflows. They might say, okay, take information about a cohort who is similar to people like Pavan, right? And the system will say, okay, I've found 50 results. Now run a campaign which will take this data and now publish a certain kind of a product. So now all of a sudden, when you open up your email, you have a very personalized campaign sitting in your inbox. And when you open it up, it starts to hit some notes, some commonality. And as a result, I am more inclined to purchase the product. Right? So the next one, obviously here, the features. These are the high-level features: data platform, omni-channel experience.
So I got what you're doing. Let's, in the interest of time, I have like two other people to work with. Let's go to what your questions are. I understand what you're doing.
Okay.
Did you have any specific questions, or you just wanted
No, we just, no, I mean, in terms of the questions, right? I mean, obviously, I'm looking for what do you guys think? Is there any high points that I must focus on? Or
I'll tell you the first thing. Let's go back here to your slide 7.
Yeah.
As you were talking about it, I was observing that the examples of systems that you are talking about often are B2B systems. Salesforce, Marketo are not the dominant systems in e-commerce. So my first feedback would be if e-commerce is your primary target, you need to understand what are the other systems that you're going to need to work with within e-commerce. So whether it's BigCommerce, whether it's, who does the marketing automation piece of large enterprises, large e-commerce enterprises, who does the analytics piece, who has. So I think you're going to need to do a deep dive into that research and figure out whom do you need to work with and how. And if you have that, if you bring me that research, I will be able to guide you on how to position this product, based on those. Your principle is correct, but you will when you actually, the devil is in the details, right? When you actually get into these organizations, you will see this stuff is, people are trying to do this. There are a lot of people who are trying marketing automation, the field of marketing automation, which is what you are trying to get into. MarTech, actually, not marketing automation, MarTech is a very crowded field. There are more than 8,000 startups in the MarTech field. So there are lots of people who are trying to do AI for MarTech. So you're going to need to understand who are your direct competitors, who are your adjacencies, who are the players in the enterprise e-commerce domain, and so forth. So I think I would advise you to go really deep and understand what does the ecosystem look like, and then you will be able to figure out how to move forward in that and how you can get your first customer. There are certain, you may have, since you follow me, you may be familiar with my writings on platform as a service. There may be ways of getting on certain platform as a service ecosystems, etc. There's a lot of strategy that you're going to have to do here to find your niche, because it's so crowded. The market is so incredibly crowded.
Yes. No, I'm quite familiar there. And there's a lot more slides here, Sramana, to present, but I'm obviously keeping it short. All that points that you brought up, I have a much larger deck which actually covers them in detail. But thank you, though. Thanks for the opportunity.
All right. Harish Neotia from Ranchi, India. What are you working on, Harish?
Yeah, hello?
Yes, go ahead.
Yeah. So in India is a late evening time, so I must greet you good evening.
Evening.
I am Harish Neotia, based at Ranchi, Jharkhand, India, and we are working in typical Indian street food sector. Panipuri, which is a major Indian savory food item served in street food.
Yes.
We are providing mobile app operated automatic food cart to serve Panipuri. Moving to next slide. So the Indian street food sector serving various snacks and food items. Mainly the problem which we face are use of pure water, hygiene, food safety, contactless serving, various compliances. So we are solving the pain point of the customer, providing pure water, hygiene, according to the FSI regulations, food safety, provided by our standard operating manuals, and contactless serving by automatic dispensing machine. And we are also covering all the compliances required. Moving to the next slide. So the competition available present in the market are in various operating modes. Some are providing only machinery, some are providing with raw materials, some are providing all the enterprise solution. And what we found that we have only one direct competitor, Water Source, available present in India. And we have all our competitive advantage by providing 10x productivity, 65% customer retention, 0% wastage, and 7x efficiency.
Okay.
Moving to the next slide. So we have done a lot of research and survey to find the customer behavior depending upon the geographical conditions and their uses and the age factor, determining the taste, flavor, and variety. And we have tested our product, and we have got a very good quality feedback from our customers. Next slide.
What? So this unit, I guess it's a machine, right? That you're selling, yeah?
Yes.
Who is the customer?
We are into B2B sector, and our customers are the food vendors who are selling this food item.
And who are they? What is your analysis of that?
They are typical street food vendors and food SMEs food restaurants, food outlets in food courts and malls, shopping malls, complexes, all there, who are providing Indian chaat and snacks and savory items.
So have you done this already? Has anybody bought it? Have you produced? Have you manufactured? What is the situation?
Yeah, we have tested our product at 3 customer points. We have already onboarded 3 customers, and we have tested it, and we have got the product validation done, and we have got some feedback also. So according to the feedback, we have modified the machine, and now the product is market fit.
And what is the pricing? Can you talk about the slide has your pricing? So please talk me through the pricing.
Yeah, it is starting from Indian rupees 25K to 2.5 lakh.
What is the difference? What is 25K and what is 2.5 lakh?
The smallest version is a tabletop model, which is of 25,000, and various kiosk model, cart model, and e-cart model, electric operated vehicle cart model are available. So the top model is electric vehicle cart, and that is of 2.5 lakhs.
I see. And which one have you sold so far?
We have sold the entry-level model tabletop and the top model e-cart.
So you have been paid 25,000 for the entry-level model and 2.5 lakhs for the top model.
Yes.
And what is the manufacturing cost of each of these?
We are making approx 40%.
Okay. All right. And then the subscription is what?
So basically, our business model revenue is coming from 3 main streams. First one is sale of the machine. Second one is the raw material, the spices that we supply. And third one is the mobile app subscription. So the mobile app subscription is for the machine operating, dashboard, and customer billing and online ordering.
I see. Okay. So what... all right, let me go to your questions, and then I'm going to, I have some thoughts that I will give you. Why don't you go to your questions? Actually, go to your go-to-market. How are you planning to sell this product?
So basically, our go-to-market strategy is based on 3 verticals. First one is the making is based on product strategy, making the product more customer-oriented in terms of price, quality, and services, and all those regulatory compliances. Channel that we are focusing on is the food and beverage segment, the small SMEs, street vendors, and food outlets serving those items. Second, we will be...
That is your customer. What you have on the channel strategy are your customers. So you're going to need to find a way to sell to them. Go-to-market strategy is how do you sell to customers?
Right. Okay. Got it. So we will be acquiring our customer through online marketplaces that are available to get the customer engagement. There are some various online marketplace for this segment. So we will be taking that, and we will make our social media presence.
Do you have any validation of being able to access customers through digital marketing?
Yes.
So is there a place on the internet where these kinds of people, like the mall operators and vendors, restaurants who sell this kind of stuff, or kiosks who sell this kind of stuff, are hanging out?
Yes. India Mart.
Okay. And how many of the potential customers, yeah, there we go. This is what I was asking. How many have you talked to, and what is the So you have 10 orders in the pipeline, 50 pre-scale sales inquiry and 10 orders in the pipeline. So is this something that people order and then you manufacture?
Yes, we are manufacturing on advance with customers.
Good. That's great. Okay. All right. So let's go to your questions. I understand what you're doing.
Yeah. So basically, my main question is regarding the food sector in terms of funding and investment. So as we see, we compare with the food segment with the tech segment. So their valuations and projections and exit, all those are in very multiplier in terms of multiplying valuation. So why this food sector is not considered as compared to tech? Means I'm specifically regarding the funding investment thesis.
So the way investment works, and the bulk of the investment in India is going to the tech sector, because the investors are trying to go from $0 to $100 million in revenue in 5 to 7 years. And there are proven models in the tech sector of how to do that. If you can show a very high velocity sales cycle of your product, you can raise investments. But I think the reason, the answer to your question is why does the tech sector get the investment and other sectors don't, is because other sectors don't have that kind of very high velocity growth model. But if other sectors show very high velocity growth models, they can also raise investments. So what you will see as you're building this company is that you're going to need to look for the high growth model. Now, what I like about what you've said here is that you got 50 pre-sales inquiries, you have 10 orders in the pipeline, they're paying you advance to build the product, to fulfill the order. This is all very good because that means you can basically customer finance your validation stage and you can create strategies. So I think if I were working with you, if I were advising you, I would advise you on applying the principles that we have learned in the tech sector to your business to find these ways of high velocity growth. And if you can implement that, you can get funding even from tech sector VCs.
Okay, great. Okay. So, yeah, got your point.
Great. Okay, Faiz, you're up next. Bhubaneswar.
Hello, yeah, hi. Can you hear me?
Yes, we can hear you fine.
Yeah, hi. How are you?
Good. And you?
I'm fine. Thank you for asking. So, yeah, let me first say something about myself. So, my name is Faiz Khan, and I'm a graduate from IIIT Bhubaneswar. And we are trying to establish a marketplace model for on-demand services customers. And the way I came up with this idea was you can trace it back to 3 years when I was in the first year, and I was trying to get someone to do my homework basically, right? So that was being difficult, right? As in India, everybody knows that we have a lot of work to do. And I was trying someone to write that down for me. So I came up with the idea that why not we can, hire someone to do something for me and he can get paid. So that was the very vague idea. And after a lot of research and market fit segment, we came up with the final idea that it's AI escrow-based marketplace for on-demand services. Can you please move on to the next slide? So basically our target segment is influencer and content creator market. As we all have noticed that these YouTubers, influencers, they're gaining a lot of traction. They are nowhere to go down. The numbers will go up. So they don't have an escrow feature because of which it's very easy to exploit them. So we thought an idea of why not to build a model where they can easily trace back their they can do their business and maintain a professional decorum. So the problem that currently we see is they don't have any escrow system. They have painful revisions. They do some clips, then the customer asks the client. The client asks them to make some revisions, and they don't pay them for it. It's very hard to find a perfect person for their business. As I'm currently a marketing head of a local salon, so a lot of influencers approach me for promotions, and it's very hard for me to trace back that how much they have delivered previously. So I guess that's all makes sense here. Now the second problem that in general the on-demand marketplace, for example, your electrician, your plumber, or a website developer, this category is generally on-demand service marketplace. So generally all the platforms that you see, they charge commission on per transaction basis, which is really pissing off the freelancers. As per our feedback that we got, they have very restricted domains and categories. They need capital to start. They have to pay to send more proposals, and that's an issue right there. Next slide, please. So our solution is AI escrow based marketplace, and the solution is Inshaan Corporation. We have a AI escrow feature, open and free marketplace. We have SEO support. For example, you are trying to search an influencer or a dancer for your business. So you can simply go to Google and search a dancers near me, and Google will pop up Inshaan Corporation accounts for you. So you can easily reach out to them. We have 180 plus categories and subcategories. Our go-to-market strategy is content marketing. For that, ample of resource information would be available at the finger point of the influencers or the YouTubers who are trying to start. Best synchronized workplace. We have multiple portfolio feature. For example, let's say you are a dancer. Now you also want to teach, and you also want to go to some event. So we have multiple portfolio feature. You can be a dancer and a DJ at the same point of time. So that's a multiple portfolio feature. We have powerful filter matrix as well. So these are all the feature of Inshaan Corporation. Now coming to the data of content creators, as you can see, only in YouTube there are 45.5 million creators out there in YouTube. In Twitch we can get the data of 8.5 million Twitch streamers available at this point of time. Accounts of creators across all the platforms.
Are numbers for India or global?
It's global. Sorry, it's global. So moving to the target customers, our target customers are content creators, influencers, and YouTubers, so-called the microbloggers, freelancers in general, local service providers like electricians, plumbers, college students because they do a lot of freelancing projects, and ITI students. ITI students are basically from India. They do this small course and they apply for or they open up their own business. So they are our target. Moving on to the next slide, please. Yeah. So milestone achievement so far. We have MVP. We have the working platform. We have 1K plus customers to our platform. We have asked to 200K plus. We have 200K plus outreach to genuine customers, freelancers in general. We have Startup India as well as Startup Odisha recognized. We were in the top 5% in Startup Istanbul competing, and we have six pending collaboration with multiple educational tech communities. Moving on to the next slide.
When you say you have a working platform and 1,000 plus customers, does that mean these are paying customers?
No, the platform is currently free. You don't have to pay anything. And we don't charge commission. So this is just the beta launch of our platform, so that we can get the customer validation and we can find our market fit. So that's why it's totally free.
So validation will come when you also validate a business model. I guess that's where I'm going with this is that what is the roadmap to validation of customers, not just free users? The free user-based businesses don't really, succeed financially. So what is the path to monetization?
Right, I get your point, and that's why we went to multiple local service providers and we asked them what is the we are trying to launch this platform and how much would you like to pay for it? And they said, as you can see in testimonials, there's multiple testimonials which we got from multiple students as well as this local service provider. We personally reach out to them and we ask how much are you willing to pay for this kind of platform, and they said around 50 to 200 Indian rupees, and that's why our current model, future model would be 100 rupees per month. So we have asked to these users, but currently the platform is totally free.
Okay. So let's go to your questions.
Sure.
You don't have a question slide. All right. What brings you here?
So sorry, I didn't know about that. We have to put a question slide up there. My question would be, this is clearly a future of work domain, right? Because we all know that freelancing domain in general, that IT sector domain, for example, website developer, graphic designers, they all are booming up. Why not we synchronize everything and put in AI so that customers would get a personalized, platform for them. For example, in influencer, there's a common term barter basis work. For example, local businesses, provide their services or the product to this influencer, and they get they get to promote their business locally through their influencer. So this is personalization, right? So my point is, why not people are focusing on integrating everything into one platform? Why are they trying to make a different platform for different segment?
Well, I think the big platforms exist. If you look at Upwork, for instance, it is the largest platform for freelancer exchange in the world, and it's a very successful company. It's a public company, so you can find out as much as you want about them, and it's been around for a long time. It's actually created with the merger of Elance and Odesk, and there's a pretty well established model of freelancer exchanges, freelancer.com, 99 Designs. There's a whole bunch of companies in that category. So what you're saying is not necessarily new. What I'm hearing you say is that you seem to have a real affinity for the influencer category, which is a new category. You're absolutely right. There are lots of influencers, and these influencers are helping sell products. And is there a freelance marketplace for influencers? And I imagine there is. What are the dynamics of those marketplaces? And is there something to do there that is special? So I guess your positioning options are: would you go specifically after the influencers and create an influencer marketplace, or would you go after a generic, like all kinds of freelancers, and create a generic marketplace? And in each case, you should try to understand the competition and figure out where is the gap and what is missing in the market.
Yeah, absolutely right. I completely agree to that, and that's why we are currently focused on influencer market, because we see there is a market gap. They don't really have the platform, and it's very easy to exploit them, because I have my friends around being an influencer, and they complain a lot about why not there is an escrow system for that. And then again comes the question of barter basis. Why not personalize the freelancing domain in general?
My sense, listening to you, Faiz, is that you have specific domain expertise in influencers. So I would, instead of going the broad route, I would specifically focus on the influencer marketplace, and maybe that's a better fit for what you're trying to do and who you are.
Right. Thank you so much. And that's what our board of advisors have already mentioned us, that we need a particular market segment to focus on. After 2 or 3 years, we can broad that up. But for initially, we see the market gap in this influencer content creators or microbloggers.
And that could be a very large market, because you're absolutely right. There are lots of influencers out there, and there's no systematic way of necessarily, there probably is to some extent, but there could be gaps in that market where you can still build a significant business.
Yeah, right. And that's why we are focusing on. And that's why we are trying to raise funds, because we have 1K plus customers, and we see that...
you do not have 1K plus customers, Faiz. You have 1K plus free users. Nobody's going to fund you based on that.
Yeah, that's what we have figured out.
All right. Folks, if you like what we are doing here, thank you, Faiz, for your presentation. I hope that was useful. Folks,
thank you so much
those of you who are listening, planning to pitch in follow-on sessions, as you can see, I am giving you very completely unsugar-coated feedback, and you have to be able to digest that and process that. If you like the approach, please refer 1Mby1M to other entrepreneurs that you know who need help. All resources for the program are at 1Mby1M.com. There is a terrific blog series. You can just following the blog, you will learn a lot, especially the Entrepreneur Journey series in the blog. We also have a series of books based on the Entrepreneur Journey series, 12 to 18 case studies. Entrepreneur Journey is our case study program. We have one of the world's most comprehensive early-stage technology startup case studies. And based on those, we have published 12 books. You could also learn from those. These roundtables happen every week. You can come to as many as you wish to. The full acceleration program from 1Mby1M is 1Mby1M Premium. If you're looking to raise financing, my recommendation is join Premium, and we will help you with that process. We work with several hundred investors, and we have relationships with them. They review our deals, they fund our companies. So, but there is a process, Just by joining the program, you don't get introduced. There's work to do, and we'll work with you. We'll advise you on how to get there, and then when you're ready, we'll introduce you to these investors. Go to the 1Mby1M self-assessment on the blog. This is a free tool. This is the due diligence questions that investors would ask you. See if you can answer these questions, because otherwise you're not going to be able to handle investors. You should, if you're trying to raise money, you should be able to handle these questions. If you get stuck, well, in any case, you should do the bootstrapping course. This is a free course on our blog. The link is here. Maureen, you can provide the link in the public chat. This is 1 hour long, and if you get stuck, go to 1Mby1M Basic, which is our curriculum-only program. You have to answer the self-assessment questions. If you're getting stuck in answering the self-assessment questions, you should put some energy into learning methodology. That's probably where you are getting stuck. Anyway, dig around on the website, see what the program offers. We have provided you plenty of information. If you have questions about the program, one of the common questions is about investor introductions. We have a whole section on investor introductions. Maureen will give you the link, but it's on the homepage of 1Mby1M on the top navigation bar. Please study that to understand how we do investor introductions. The curriculum is described in detail. We are a case study-based program. We use blueprints of how people have done this before. Here we go, investor introductions. And that's pretty much it. Our methodology is lean, capital efficient, bootstrap startups. So you're going to need to bootstrap first, validate, and then raise money. The next few roundtables are January 21st, 28th, and then February 4th, 11th, 18th. Feel free to book your slot if you're planning to pitch. We also do rendezvous online on LinkedIn Live, Facebook, and Twitter on Tuesday mornings at 8 a.m. Pacific time. Okay, we can take more questions. If you have more questions, you're very welcome to ask. These are the following answers. Yes.
Hey, this is Pavan here.
Yeah.
I don't know why other folks dropped off, but I guess it's good for me. I have more time. Hey, I really appreciate what you're doing here. So really thank you. One thing that I have felt this last 1 year has been, a lot of going back and forth, ups and downs and whatnot. So I'm quite interested to actually be that lifetime member.
It's not lifetime, it's premium annual.
So it's the thing, Sramna, I have in mind is that obviously, there's a lot more that I wanted to cover. And like you pointed out, it requires a lot more brainstorming and fine tuning, all the details, right? So I certainly agree with you. I've pitched it to a couple other investors too. And one thing that they felt is, hey, you're shooting too big, right? Try to narrow it down to smaller things and then slowly expand, right? And
Absolutely.
What is that smaller thing and start?
It's much more crisply, much more sharply, and you're going to need to engage at least a couple of customers before you can raise financing. So come to the premium program, then you can, iterate with me on a week-by-week basis. We have private roundtables for the premium members every week where you can come and talk to me. We can go over more of what you have learned. I can give you guidance on how to, what to do, how to do what you need to do, and then that would be the best way for your stage, I think, and for what you need to do. I think that may be the best option.
Perfect. I think I need that one-on-one mentoring program. So just out of curiosity,
it's not one-on-one. It's the same format as this. It's roundtables.
Oh, I see.
But you get to bring your project, and we can work on whichever area of your project that you need help with.
Okay. And is it? Can we only talk about the one venture that we are working on, or can we bring the things that in general that we are also focusing? Just curious.
Well, I don't recommend you work on more than one venture. It's hard enough to do one venture. So
okay.
I think the chances of failure if you try to dilute yourself is very high. So I would like to understand why you're even asking this question.
I know, right? I mean, so I'm actually bootstrapping 2 ventures right now.
I wouldn't do that. That's a bad idea.
Right. So, I mean, it's I know what you're saying. It was a thought that I had in my mind as well. But
I would suggest you use the self-assessment questionnaire and see which one is the stronger of the 2. If the one that you pitched today is the one that you think you want to work on, then focus 100% on that. Bootstrapping one venture is hard enough. Bootstrapping 2 is impossible. So please don't do that. That's a surefire way of shoot yourself in the foot.
All right. Okay. Thank you. Those are the only questions I have.
Great.
Thank you.
Anybody, if you have other questions about the program, please contact Irina. She'll be happy to help you. So any other questions, folks? I see some other people in the room. If you can also ask questions in public chat. If you have questions, you're very welcome to ask in the public chat as well. Anybody? Last call for questions, otherwise I'm going to adjourn the session. Okay, I don't see questions, so we will see you next week. Bye-bye, everybody. Thank you for coming today.
Thank you.